trade. So the news here is that the company is planning to demerge one of its business arms. So what does the company do? It's into manufacturing of steel, allied products, but it also does, and other products also which they've entered into, but they also do the distribution, retail and trading of these products. Now, if you see these two business lines, manufacturing has lower margins and it has lower return ratios compared to the other business, which they call as the building materials marketplace, which is basically trading, distribution and retail of all their products. Those numbers will come up for you in your screen. Look at the return on capital employed for manufacturing versus their other business, 27 to 28%. Look at the margins. Manufacturing margins are at 1.7 to 2.1%, while the margins of the other business is, upwards of 3% going up to 5.5%. So because manufacturing was dragging down the overall, business ratios, the KPIs for the company, they decided to demerge. Once you demerge, you can focus on both these verticals, maybe try and get in an, external investor. It will unlock value for the shareholders. So the plan right now is that if you have one share of Shankara Building Products, then you will get one share of the demerged entity, which is the building materials marketplace called Shankara Build Pro. And eventually, this demerged entity will also get listed on NSE and BSE. So there is that value unlocking, which the companies announced yesterday in a board meeting post-market hours, and the stock is reacting to that development.
Okay, big move there on Shankara Building Products. It's up almost 7% right now. But, for the year, it's not done much, like Rima was pointing out. Maybe because the, other parts of the business were dragging. It's pretty flat for the whole year, right? Just around 10% or so in terms of the move year to date. But let's talk about the PSU Bank